Hello, this is Joe Pryor, the virtual real estate team in Oklahoma City, and this is the second of a two-parter about the market conditions for investors in the Oklahoma City market. Now, in the last one, I talked about the overall 12% appreciation rate in rental rates, which is really helping build more wealth for the investors, and also with the higher prices, actually having rental appreciation greater than housing appreciation, which really helps your return. If you're buying right now. But now I want to talk about in general appreciation. You know, Oklahoma City has been isolated to a great extent through the slings and arrows of outrageous fortune in the housing market, the big ups and the big downs, especially in 2007, 2008. When I started selling in big numbers to investment groups in 2004, there were articles all over the country that we were the most inflation-proof, I guess, or recession-proof city in the United States. And if I look at a chart, and I've seen these charts from 2000 to 2020, you see 3% per year. And so when I do a return on investment analysis, that's what I do. I do 3%. Now, could you get more? Of course you can. But we try to be conservative in what our estimates are. But this last year, for the first time in my 32-year career, I saw some double-digit appreciations here that I'd never seen before in my real estate career. Now, a lot of it was around 6%, which is still double what we estimated, but we did see some 10%. Now, will that carry forward? Who knows? It's still going strong right now. My suggestion to most people is that, yeah, it'll correct itself. It's going to go back down. We're not a market that consistently is double-digit appreciation. 32 years of experience will tell you that. So we can have these anomalies in the marketplace. And I don't want to get crazy to make your numbers look really good. We don't have to overestimate our rents to make things look good for you and then disappoint you because we want you to buy more. And reality is a very important thing for you to have confidence in. But the second thing is I don't want to go into my return on investment analysis and say, oh, I'm going to put 8% because the numbers will fly off. They'll soar if I do that. Now, can we possibly go up 1%? To 4%, even though 6% or 8% may be the norm? Yes, we can. Because I don't have a crystal ball. I cannot tell you what's going to happen in 5 years. It's hard enough to tell you what's going to happen in the next 6 months. I'm a little surer about that than I am 5 years, but I've got to do something 7 or 10 years out for you in terms of what's happening in the marketplace. Now, is buying quality homes, new construction, great subdivisions, great schools going to get you more than 3%? Absolutely. Can it get you 5%? Absolutely. Am I going to do that? Absolutely not. 4% is what I'm going to do if the market is right and if I believe it's consistent, but I'm going to be transparent with you and let you know that that's what I'm doing, despite the fact that historical data in the last 20 years tells me 3. But I think our market is starting to fly. Our unemployment is low. The economy is kicking butt. It's doing extremely well here. We've been out of COVID lockdowns. In fact, in phase 3 since June of last year. It's a different marketplace here in Oklahoma City. I'm very proud of what we've been able to do. And so rental appreciation and home appreciation is fantastic if you're a real estate investor in the Oklahoma market.